New move in how insurance companies can set their rates could mean higher premiums for homeowners and renters. California will now allow these companies to use so-called catastrophe modeling. CBS 8's Richard Allen is here to explain how this works. Richard?
Well, Carlo, that's right. Insurance Commissioner Ricardo Lara is calling this his sustainable insurance strategy to convince insurance companies to remain here in California and continue writing new policies, even in high-risk wildfire areas.
All over the state, people are losing their insurance.
After years of devastating wildfires, including the Los Angeles wildfires in January, more and more insurance companies are opting to pull out of California altogether, leaving homeowners scrambling to find coverage. The approval of the state's first ever wildfire catastrophe model could ultimately mean that more policies are written.
Insurers are using these models all over the country in every other state.
These forward-looking computer-created catastrophe models take into account historical wildfire data, climate trends, engineering research, and mitigation efforts to come up with a more accurate assessment of wildfire risk to help insurance companies determine how much to charge customers.
Insurers have made a very strong case that they needed to be able to use catastrophe models. As a consumer advocate, we are worried that those models will cause people's rates to go higher.
Amy Bach of the nonprofit United Policyholder says that while it's possible the use of catastrophe models could help stabilize rates in the long run, premiums could potentially rise in the short term.
We're going to see rates go up no matter what, my friend. We're in a new era here with these severe convective storms and wildfires in January. And it's just that inconvenient truth that it costs money. Climate change has a price tag.
Under the insurance commissioner's plan, insurance companies that use these catastrophe models will be required to write more policies in wildfire distressed areas and could no longer cherry pick only the safest neighborhoods. In a statement, Insurance Commissioner Ricardo Lara said, quote, "This closes one of the biggest coverage gaps across the state. Under existing regulations, insurers have raised rates without guaranteeing coverage or committing to Californians, causing distress for homeowners. That ends now."
This is a solution that we're going to try, but we will be, of course, watching out for consumers all the way.
And keep in mind, these wildfire catastrophe models have existed for more than 20 years, and every other state but California already allows insurance companies to set rates using this modeling. But California would be the only state where insurance companies will have to commit to writing more policies in these higher risk areas under this new plan.
So